In the meantime, I want to bring your attention back to Europe because it's likely to be a very busy day also on the data front when it comes to European dynamics. We'll be getting the first reading for November's Eurozone inflation print this morning. Now, the headline figure is expected to come in at 2.1%. Once again, this is virtually bang in line with the European Central Bank's target, as it has been for much of this year. However, when we compare the state of Europe's biggest economies, we get a very different picture. Take France. November inflation came in at just 0.8%. Also below the average, Italy, where inflation stood at 1.1% and is falling. By contrast, inflation in Germany saw a surprise pickup, the harmonized print at 2.6%. And in Spain, widely seen as Europe's star pupil, inflation is also rising and now stands above 3%. Putting together the sum of the parts means inflation for the region as a whole continues to be on target, and markets are pricing in no further rate cuts from the ECB. In recent remarks to CNBC from the President and Vice President of the European Central Bank, reflected that similar sentiment.
We are in a good place. I said that. We have been in a good place for a little while, and we continue to be so. I think the best that monetary policy can do is to provide price stability, to make sure that every operator, whether you're a consumer, you're an investor, you're a corporate, you're a household, you know that your central bank will deliver on its mission, price stability, and that inflation will be at 2% medium term. That's the best we can do. And we are delivering.
The ECB is done so far. We are open-minded. We have said very clearly that if these circumstances change, and can change, then our monetary policy stance can change as well. But so far, I think that we are in a comfortable place.
So that's the latest in terms of inflation. But the Eurozone is still grappling with modest GDP and employment growth. The latest print for GDP came in at just 0.2% for the third quarter, with employment rising just 0.1%. We'll be getting the final reading for both on Friday. So as you can tell there, a very heavy week in terms of economic data for the Eurozone. Let's discuss indeed what's going on with Isabelle Mateos, Lago, Group Chief Economist for BNP Paribas. Isabelle, good morning. Thank you for being with us. I'll start the conversation by asking your thoughts on the disparity that we just highlighted there in terms of the domestic figures within the Eurozone for inflation.
Yeah, I mean, look, it's first of all, thanks for having me. I think it's frankly nothing new. Ever since the very start of the Eurozone, there have been inflation dynamics that were sometimes very, very different across the Eurozone, and it's been true in recent years as well. And, that's why the central bank is focused on average inflation for the Eurozone. And as you've said, that particular one is pretty much at target right now. It's nothing new. It's higher in some countries and lower in others. But by and large, everywhere it's moving in the right direction. And that's also important.
But I have to ask you about Germany because we saw an uptick there. And though I appreciate that we're talking about an average here when thinking about ECB policy, do you see any signs of concern with this recent uptick in inflation for Germany?
I think, Germany is obviously the largest economy, so what inflation developments in Germany are very relevant for Eurozone inflation. I think absolutely the Governing Council is going to be paying close attention to inflation developments in Germany, and I think this recent uptick, as you said, will have caught attention, as well as still strong inflation in services. I would say these are the two items that seem to catch the attention of Governing Council members, and even those who recognize that risks to inflation are now tilted to the downside. They don't really want to move ahead of that because there's this lingering concern that indeed in Germany and in a few other places and in services, inflation maybe is not completely under control. But yeah.
I would like to look at broader activity, Isabelle, for a moment, because when you look at the PMI figures for October, they were showing us an uptick in activity. Do you think that the numbers for November will continue that activity?
Yes, absolutely. And in fact, what is striking when you look at the string of data that has been coming in since the start of October, it's not just the PMIs. You've seen strength across the board. You've seen the European Commission sentiment indicator, which is at a multi-year high across a number of sectors and dimension. You're seeing consumer sentiment also increasing. You're seeing car registrations growing for 4 consecutive months. And so, while there are still pockets of suffering in the economy, by and large, we're seeing broad strength in services, in big parts of manufacturing, and that's very encouraging, and that's what is supporting, frankly, our pretty bullish forecast for growth to keep strengthening into the next couple of years after already strengthening through most of this year.